Hi traders, good food is the foundation of genuine happiness. But the question is, will shareholders of Zomato find the same level of happiness in the coming years? The rise of food delivery apps in the last couple of years have made the investors of the stock market go crazy. Behind the only food delivery stock available in the market right now, that is only Zomato. Because of the internet penetration in Tier 2 and Tier 3 cities, the entry of the big players like Reliance and Tata in this food industry a big challenge for Zomato and also a tough competition from its rivalry Swiggy platform. So, how is the future of Zomato look like? Let's find out. Industry outlook. By the end of 2024, online meal delivery business is predicted to generate 36,000 crores in revenue, growing at a compound annual growth rate of 16.14% during the following 5 years. As a result, the anticipated market volume of 76,000 crores by 2029. In the grocery delivery market in India, revenue is expected to grow by 30.7% in 2025. The market volume for grocery delivery is projected to be 25,000 crores in 2024, with an average revenue per user in the food and grocery delivery market in India. It is projected to 16,000 rupees in 2024. Food delivery market in India is going to witness the number of users rising to 30 crores by 2029, while the user penetration in this market will be at 15.6% in 2024. India's online food delivery market is strengthening due to rising demand for convenience and wide range of restaurants available. Company overview. Zomato is a tech company. It connects many customers with restaurant partners and delivery partners to meet their needs. Customers can also use the platform to write food reviews, upload photos, locate restaurants, order food and other daily essentials online. Customers can also avail the dine-out facilities and avail discounts on their food bill. On the other hand, Zomato offers its restaurant partners industry-specific marketing solutions that help them to attract clients in order to expand their business. In addition, they run a B2B business model called Hyperpure. It provides restaurant partners with premium ingredients and kitchenware as a one-stop solution. Zomato holds a dominant position in meal delivery, holding a 55% market share. In addition, Blinkit leads the grocery delivery business with a 45% market share. Financials. Revenue of the company increased 5 times from 2,600 to 12,114 crores in 5 years. It is an outcome of rising consumer base. Zomato's net profit has seen dramatic growth in the last 2 years, from minus 2,386 crores to plus 351 crores. The reason behind this focus on reducing cash burn, increasing platform fee, reducing the discounts given to customers, as well as introduction of Zomato Pro due to increased business efficiency brought about by logistics streamlining. Zomato's operating profit margin has also steadily improved from minus 2,300 crores to plus 42 crores. As the company has focused its food delivery business on 8 major cities and closed operations in areas where margins were being squeezed. Return on equity. The company's ability to make better use of shareholders' cash to increase their market share and acquire Blinkit, it truly has been a game changer in increased its return on equity. Zomato's gross order value has increased over the years from 11,220 to 32,224 rupees. Because of the efficiency in food delivery, time has been reduced. The company adds 1,16,000 restaurants under their network in the span of 5 years. Future plans. Zomato is gearing up for a significant expansion of market share and profitability and to establish its strong foot into the fast-growing direct-to-consumer D2C space through its 10-minute delivery platform Blinkit and its food delivery business. Now Blinkit has a presence in 26 cities. The focus from an expansion standpoint is the top 8 cities in India. Bangalore is the Zomato's second biggest city in terms of gross order value. Still, it is 30% less than over the Delhi gross order value. In future, Zomato aims to bring Bangalore and Mumbai and other major cities to the level of Delhi gross order value. By seeing Zomato's competitive advantage in the industry, it will be interesting to watch how Zomato maintains and grows its market share over time as large competitors like Swiggy enter in the picture. It will be fascinating to observe whether customers are willing to pay an additional 20 to 30% for convenience in a country where people are highly price sensitive. Technical chart. If you look into price action of Zomato, it is consolidated between 180 rupees to 200 rupees from April to June. But good thing is that price range breaks out on July 1st. Now trading at 207 rupees. Now coratrade suggesting Zomato, this is the right time to add in your portfolio for better returns. Thank you.